What is up, everybody? Welcome back to another Gold Rush Weekly Watch List. This is the first watch list in a couple of weeks. I've been traveling nonstop pretty much the past like 6 weeks or so. So it's been really tough for me to kind of get a groove on what's going on with the market. But I do kind of like where we're at. It does seem like it's in no man's land. However, looking at SPX on the screen, you see that we formed sort of a double top here. We've kind of returned to this previous area where we rejected. And I think we're going to do the same thing every time we reach one of these peaks, right? I do like that we got a nice move to kind of continue the uptrend here. We did pull back. We found a previous support where there was previous resistance, right? Which is very, very good. And so I think we're going back to test that level. So either we retest that level and work our way back into this 44.56 level, or we fail and come down to this area of consolidation here around 42.70 or so. Either way wouldn't be bad. You know, for the long run, I think that pulling back to that 42.70 or even 4200 would be very ideal for a strong continuation of the market, right? You give a lot of these other sectors that are kind of lagging behind, you give them an opportunity to catch up and for the market to have strength overall, not just in a few sectors, right? So that's what we want. For a strong market, you want all the sectors to work in conjunction. So I'm loving it. You know, whatever the possibilities are for XPX, loving it. Let's see. I'm going to go through these indices very quickly, and then I have about 6, 7, 11 names, and we're going to blow through these as quickly as possible. QQQ, same exact setup as SPX. A little bit stronger, right? A little stronger in the sense that like we're pulling back and trying to find support. I think that we're going to find support in this area here. You see where there was this consolidation, massive rejection, and then a big bounce. I think that we're going to retest kind of this area here, maybe consolidate within these two levels here between 358 and 353. You know, so I don't mind a little bit of a pullback here. I actually want tomorrow to be red so we can kind of find our ground and find our bearings before a continuation. So I'll be looking for that. Otherwise, we do have to undo the not only, you know, this big Thursday candle, we have to kind of undo some of that carnage, but also the beginning of the week, right? Go back to kind of the previous week's highs. So a lot to be done there, especially, you know, after hitting this double top, we kind of fall. We broke through this area of consolidation here. So I think that within this level is a good spot for us to kind of consolidate out before we regain our strength. So let's see what happens. Next one is XLE. XLE has been showing strength. I like the weekly chart on this, actually. And XLE is one of the candidates for this week. For the watch list, so I can just go over it now. So real quick, on the weekly, we have the higher highs and higher lows, right? Here's your higher lows. Your lows are getting higher, and then we just broke through this and kind of started to. We did have kind of a downtrend forming in the past few weeks since November, right? We had this downtrend forming and we have broken out above it. And then we came and retested this area where we couldn't break not once, but twice, right? We struggled with it a couple weeks back. We broke through 2 weeks ago. And last week we came back and retested that level. So I want to see if there's a potential continuation for XLE into these levels here, right? These are the levels that I'll be looking at for XLE if we can get a bounce. Otherwise, if we don't get a bounce, I want to see it break down and kind of retest the low of the previous weeks, right? So those are the levels that I'll be watching for XLE. XLE is in a very nice spot for us. You know, clearly defined levels, clearly defined risk. XLF, right now, you know, not really interested in it. I mean, it has that weekly consolidation there where and it looks like it's bouncing a little bit. I want to see if it can kind of try to form another reversal pattern up here because we still have a big red candle, right? So I want to see a potential reversal pattern form here, maybe a hammer on the weekly or so. So I'll be watching that on the weekly for a potential continuation, or maybe we can come back to retest this trend line. And then I don't think, oh yeah, Marvell is on my list. Good. Okay, so Marvell. I'm looking at Marvell for calls. The reason why I like calls, although I will say, you know, we do have this kind of bear flag that broke down here, another bear flag that kind of is starting to potentially break down. However, I do like that buyers look like they're defending this. Look at how small, look at how tight these candlesticks are getting, right? These two candlesticks here. Also, you see buyers love to step in this area. So, and what I'm looking at overall with Marvell is that it's in a massive channel. Let me just go ahead and draw the channel now, right? It's in a massive channel. It's holding this gap. Now I had this level, this gap. I was very interested in holding this gap for you know, after it gapped up with NVIDIA earnings and it held the gap, and I wanted to see it continue to work its way up. It's been struggling a lot within the range of pretty much, you know, these two candlesticks here, these first two candlesticks. And but I like where it's at now. It looks like it's at the bottom of the channel. I mean, it can easily fall down right through this gap and has a massive gap to fill all the way down to about 49.30 or so. However, I do love the fact that buyers are interested here. So if we do get strength in the market, especially in tech, I think that Marvell is going to be one of those that might give us a nice pop, especially with this very strong candle and then kind of a weak red candle, stronger red candle, and now they're kind of being very indecisive these past few days. So I think there's a potential for this to really pop and break through and maybe come and test the high of this day, which was 59.98. You know, and either way, I mean, it can go up, it can go down, it can come back and retest the bottom of this broadening and then fail hard, right? But if we do get a big candlestick in tech, I think that Marvell will be poised to benefit. Next one's Nvidia. Nvidia, I like it for calls as well. You know, it's a very ugly chart. There's nothing pretty about this chart right now. However, looking at this daily chart, we do have a potential, you know, head and shoulders situation going on here. I want to see buyers step in. Like, you see where buyers are interested in this, right? It came way down here and buyers brought it right back up and sellers couldn't push it down, right? And then we formed this kind of this green candle at the end of the week. And where we formed this candle is where there was a bunch of previous resistance, right? 1, 2, 3, 4, 5, 6, 7 days worth of resistance, right? Even this day, even this doji day. So there's a potential for this small downtrend on the daily to break, right? And so that's what I'll be watching for with Nvidia. And you can almost call it a pivot machine gun potentially, right? If it does want to break through and volume steps in. You see, there's a bunch of volume in the last couple of days. I don't know. I mean, it's really light on your screen possibly, but that last day, a bunch of volume came in and well above the 30-day average, which is that orange line. So I'm interested in seeing this continue to the upside. I think above 440, we can get to 450 very quick, and above that, we can get to 465 very quickly. So I'll be watching Nvidia for the next couple of weeks. Let's do. So I'm looking at my setups, and I have some that are bullish and some that are bearish. Let me let this ambulance pass. All right. Good old New York City. All right, so let's switch over to let's do two bearish setups and we'll get back into the bullish setups. Let's look at Tesla. Tesla is, now, I'm always going to be a bull on Tesla. Look at Elon. That's hilarious. That's hilarious. Let me let Fast and Furious pass. I'm sorry, guys. There's so much noise over here. It's insane. All right, so what I love about this chart, I mean, Tesla, they ran it up, right? I mean, it kind of bounced, gave us a nice solid little impulse move, and then a strong continuation, right? And then we kind of made this move from 164 all the way to 235 or so, right? And then, oh, funny, I'm gonna check that out. Doge has a dog that pops up. I'm gonna check that out. So nice, strong, impulsive move, and then a gap up, came and retested the top of the gap, right? Didn't fill it. And then just ran it up, continued to form gaps and all kinds of stuff, right? And now it's pulled back. I think that, you know, obviously you guys know, I think that pullbacks are very healthy. And I think that we cannot do without them. We're currently, so the reason why I like Tesla for the downside is because I just drew this Fibonacci. I'll color it in red so that you can see it a little bit more clearly. So the reason why I like it to the downside is because it's retraced more than 50% of its move. Right, here's the whole move from this kind of area consolidation here all the way up to this high. And then half of that move is just right here at 231.92. And it's already gone below that, and it looks like it's just heading down hard, right? Now, I think that the ultimate target for Tesla is going to be this $198.60 level, which is only about $17 away, right? Nothing crazy. It could be like a 2 candlestick move. But I want to see it retest some of this area of consolidation. You see 3 candlesticks here, resistance here, and then support. So I want to see it kind of test that level of support, and then from there potentially run it up. So I'm favoring it to the downside. Now, that's not to say that there might not be a good upside move there, right? We have this previous level here at 217.65, above 217.65, which looks like it was almost the high of day. Above that, we can try to retrace to that 231.92. We can go back to that 50% and try to see if we can break it. Let me throw some moving averages on this, actually. Let's see. Yeah, let me throw some moving averages on this. Okay. This is not my regular trading computer, so I don't have the setup the way that I want to. Let me take this 10 out, keep the 20. And so I think that Tesla's going to be one of those that, it's like most hated, most loved, and it's just a matter of who has control of it at the moment, right? And right now, I mean, we've been in a rough market for the past couple of weeks. I think that Tesla is always going to lead in terms of what investor sentiment is. So I say that to say basically, the market is going to kind of follow what Tesla's doing. The market's always going to follow like what Apple's doing, for example. So I wanted to throw these moving averages up to see what the overall vibe is. Now, they're all pretty much still in order except for that 20. That 20's crossed through the 50. The 10, I'm sure, it's like way down. The 10's got to be like cut through both the 20 and the 50 at this point. We've given up the 100-day, but we have this 200-day that can act as a level of support. So again, we pulled down all the way back to this 198.60, let the 200-day catch us, and then from there we can decide whether Tesla's going to stay above or below. Now, Tesla's only been above its 200-day moving average since May, right? And in the past like 2 years, ever since it formed that double top over here, September 2022, almost a year ago, right? Almost an entire year underneath the 200-day moving average. So I think that it's going to come back and retest it finally, and then from there decide whether it wants to break up or go down. Regardless is good. If you're a shareholder like me, then what you do when Tesla is below its 200 is you go ahead and buy it. You add to your position, right? And then if it goes up, then you just chill and just watch your value go up, right? So yeah, I like Tesla personally for a downside right now. Next one is Netflix. Just want to revisit this. Yeah, okay. So this gap here, I mean, there's still a bunch of gap that has to get filled. It's much smaller than what initially it was. I'm going to go ahead and just draw it to there. That's how much is left to get filled, right? So we still have an unfilled gap, which is good for a future, right? Right now, it looks like, we got like kind of a head and shoulders vibe over here, right? We have the shoulders. Here's a head, other shoulder. Couldn't hold above this level here. It looks like an earnings dump, right? Is that what that is? Let me see. Yeah, that was earnings. Big indecision into earnings, and then good results, but fell. Actually, let's check the results real quick. Oh, there was a revenue miss of almost $1 billion. So anyway, so it kind of tried to hold a 50-day moving average, and it's been falling ever since. I think that it wants to target this 100-day, but personally, let me just take the moving averages off for this because I don't want them to skew my bias. I am downside for this. And the reason why is because I like this area of consolidation here, right? All this consolidation here, 6 days worth of consolidation. I like this level here. I wanted to come back and retest this level here. That's what I'm looking for. 356.63 with Netflix. Especially with like this area of lower high being even lower than this area. So I want to see a continuation to the downside. I want to see a downside push. I want to see 385. I want to see 380. I want to see 360 with Netflix. And again, this is if the market supports a downside move. I'm not, I'm not just like hoping that Netflix is going to be the odd man out where it's just going to go down, 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 right? If the entire market bleeds like it has been the past couple of weeks, then there's a potential for this to give us some good gains to the downside. If it does decide to bounce, I mean, it is in an area where it previously consolidated. So there's if I were to throw a volume profile on this, then I'm sure that there's going to be a bunch of support in this area. Yeah, I mean, you look at this extension here. Look at how much volume is traded in this area here, right? So if we can overcome this candlestick, we can work our way up and try to go back to that 426, 430 level. But if for whatever reason the market doesn't support it, look at this massive gap here. The next level would be that 364.75-ish. Right, back to where it came from. So that's what I'm watching for Netflix. Let's switch over to the call side, looking at Snow. So, and real quick, before I go to Snow, let me just check Doge USD. That's funny. That is hilarious. That is hilarious. All right, so let's see, Snowflake. Get rid of these volume profiles. I mean, it's sitting, and I am bullish on Snowflake. It is sitting at an area where there's concentrated volume, lots of volume in this area. Let me go ahead and remove the profile. The reason why I like it, you know, we formed a double top and we fell pretty hard ever since we hit that double top. A bunch of, you know, head and shoulders, all kinds of stuff, right? Channel breaks, all kinds of stuff that brought us back down to this level. Now we do have, I think first and foremost, I think this is an area of demand, especially after falling on earnings and then, you know, indecision on this day and then massive move up, you know, like 6 back-to-back green candles, little pullback and then a nice continuation, right? So I think there's a potential area of demand here, especially with all this consolidation back here. I'm just gonna go ahead and pull this box back, way back, right? All this consolidation in this area. So I think that there's if the market supports it, I think that Snowflake is poised to have a nice strong move up, especially with all these every day the highs got lower. Potential pivot machine gun if we can get a nice strong push out of it, right? For Snowflake. Next one is D-Dog. D-Dog, I mean, you know, it's just very clear why I like this. This has a beautiful gap. Earnings obviously fell pretty hard and then put in only 2 red candles between the earnings and now. It's been consolidating pretty hard for the past 8 days or so. And it finally broke through on the Friday. And now it's working its way back into that gap. Now, I left some previous levels here. I was looking at it pretty hard, and I left some of these levels here because these are going to be the same exact levels that are intact for our plays, right? We want to see it break into that 95 level. We want to see it get to 97.37. We want to see it get to 99. We want to see it get to 100. So those are going to be the 95, 97, 99, and let's just call it 101, right? Those are going to be levels that we want to take out for D-Dog. Now, one thing that does concern me with D-Dog, I mean, I'm bullish on it, but one thing that does concern me is there's a potential rising wedge forming here, right? Potential rising wedge forming. And for those of you that are skilled in your technical analysis or have looked at enough charts, you know that, you know, like for example, this is a kind of a falling wedge and it broke to the upside. Rising wedges usually break to the downside. So that's something to watch. If it doesn't just immediately rip up into this gap, then there's a potential for this to fall and work its way into, you know, undo some of these lows of all these green candles. All these green candles need some negative volume in it, right? So there's good potential for a downside play there as well. But for now, I'm very bullish on D-Dog. Let me just check the moving averages on this real quick. Yeah, I mean, it's in a good spot. It held that 100-day moving average. So I would say we'll look to target that 50-day moving average at some point. You know, nowhere near the 200. So let's see what happens. Let's see what happens with D-Dog. Next one, let's do, I'm bearish on Costco, and you can see why. I mean, this thing is just, you know, and let me move, you know, I'll leave it. I'm not loving the 50, but I will leave it. Let me go into the weekly real quick. The weekly is why I'm so bearish. Looking at the daily, we got the double top that formed at this area of previous area where we are interested, 564.75. Good double top formed on it. 4 or 5 days of retesting that area before falling really, really hard, and then even forming a red candlestick on a green day, right? So I think that the only thing that really saved this was a 50-day moving average. And so I want to see it undo that 50-day, and I want to see it retest this area here at 525. Now, the big reason why I like this so much is because we had 3 weeks of consolidation, and finally we gave it up. We finally gave it up on this last week. So I think that we got a nice strong push into retest this area. You know, there's like between these 3 candlesticks, this box right here, the bottom of that range. I want to see it kind of go back to that area and check to see if there's some a little bit of demand there, right? So I want to see it kind of fall down, retest this area here between 539 and 525-ish, and then from there blast off into 600, right? At some point, eventually, is what I'm looking at for Costco. Next one is Amazon. Amazon. Let's do a daily. So I like Amazon. It is resting on the 50-day. I do like it to the downside only because it's already filled this gap, right? This gap here. Oh, sorry, this gap here. Sorry, this gap here from 133.69 into the bottom of this candlestick, 139.63. I do want to see it fill all the way. I want to see it fill to the 129.79. You know, it did fill the small gap that was here between these 2 candlesticks slightly. I want to see it fill that. I want to see it come back to the price here, right? Back to this 129.07-ish. So any weakness in tech, I think, would reflect well for Amazon, especially giving up that 50-day. And then, but again, if the market doesn't support it, I wouldn't go crazy. I wouldn't try to force a play out of it. Let me just see something. And also, I like the fact that it's retraced most of this move already. It's already done more than 50% of the move. So why not just go for 100% at this point, right? That's what I'm looking for with Amazon. Now, I think there's something in the news with Amazon. If I remember properly, let's see. That Instacart IPO is gonna be pretty good. And Amazon restart service that competes with FedEx and UPS. So Amazon has always struggled with last mile, just because that's not the type of business that they've always been in. Like FedEx and UPS have been in their industry for hundreds of years at this point, over 100 years. Amazon started as a bookseller. So Amazon's rapid takeover attempt, I forgot when it was. It was like a couple years ago or something like that, where they were trying to do last mile service. Failed. I think they were trying to take over the postal service, and I think like the government blocked it. They were like, "No, we don't want that." But it looks like there might be something interesting there for Amazon. Now, the reason why this kind of supports my thesis is that they relaunched on Friday. Interesting. Service allows sellers to ship Amazon orders or products sold on other sites. Ship Amazon orders or products sold on other sites. So they need to be businesses that sell on Amazon. So any kind of storefronts that have a presence on Amazon to be eligible for the service. That's very interesting. They already provide shipping to merchants who use the new service allows sellers to use the company's delivery service without storing their shipping products in its warehouses. Interesting. Only for domestic shipments. So Amazon is just looking for a way to lower their costs, right? Because they pay money to UPS and FedEx for shipping, or rather, they have to pay a fee as part of their expense curve. But why this supports my thesis is because that's going to cost them money, right? They planned it out, and now to execute it is going to cost them money, right? I mean, over here they got those Waymo trucks, those EVs, that are pretty cool looking, but those things aren't cheap, right? This new technology. And then, I mean, I live in a metropolitan city, so imagine like some of the places that don't have the infrastructure. Some of the places in the Midwest and some of the places in the South that don't necessarily have the infrastructure lined up where they can just like turn it on immediately and start using it right away, right? They're gonna have to spend money in these places. They're gonna have to ship. They're gonna have to build some of these distribution centers in these places, right? They're gonna have to pay money for hiring and advertising in these places. So that's gonna cost them money. As a shareholder, I don't like when they spend money. I like when they make money. But them spending money is good for me if I'm looking to play some puts, right? Especially on that 50-day moving average. So we'll see how it shakes out. I mean, overall, I think that Amazon's a great company. I think that it'll work out well for them, especially this is their second attempt. They might not get it this time around. They might take one or two more attempts, right? We'll see. But I think that it's a great venture for them. However, the reality is it's going to cost them money to try to do it again. So in that costing them money, if it shakes out good, bad, whatever, regardless, it's still going to cost them money. And I think that as it costs them money, shareholders are going to dump and try to buy in at a better price. Maybe at that 100-day moving average, sitting there at $120. So we'll see. I think it's going to go downside. Let's see. Next one is U.S. Steel. This is one of the best setups in the market right now, in my opinion. We got this strong bar. I don't know what the catalyst was for this. If somebody knows, go ahead and share it with me. But massive bar coming out of good consolidation, bounced off that trend line. Right, we had this trend line that's been intact for quite some time. You see how far back it goes, right? Way back when it formed the lows in July of 2022, and so we got a nice bounce. I mean, this is a catalyst-driven bounce, right? For sure. Look at all the volume that came in, right? So nice catalyst-driven bounce, and then inside bar. This still an inside bar. All of these bars, all of this volume is still within this one candlestick, right? So, and what I'm looking for, and I like it a lot for the upside, because although we have a lot of sell pressure up here, you see all these wicks on the top of these candlesticks. What I love about it is it looks like it's trending upward, right? It looks like it's trending upward. Even like the red candlesticks, which appear black on your screen, but they're red in my heart, right? These red candlesticks are still taking the trend a little bit higher. There's not a lot of strength in this red day, right? Not a lot of volume in this red day. Look at how much volume steps in this. I know it's kind of hard to see here, but look at how much volume steps in on the day where it tries to go green, right? On a red week. So I think that we have market support, especially in this sector. There's a potential for this to rapidly break out, right? Take out high of day, take out previous high. Final target will be 32.52. Above that, let's go to the weekly chart. Then we got some of these levels that have not been explored in quite some time, right? So, and I think this is an interesting area here too. Okay, so that's what I'll be looking for X. Now, if we do get a nice downside break, I would like for it to retest, right? And we get the downside here if we end up like going insane in tech. I think Nvidia has something going on with it. There's some sort of catalyst with Nvidia this week, which is something to watch out for, because that's what the market is going to be looking for whatever's going on with Nvidia, results for that.
It has news or earnings, I think.
Let's see. There's something. There's like an investor day or something going on. But with that being said, if the money floods back into tech, like just rips into Nvidia, obviously AMD and all that stuff, then money's gonna flow out of sectors such as U.S. Steel. So, so in that situation, we can break the low of day, retest this pivot here. Let me get rid of that, and then work our way into that bottom of that candlestick. Let me go ahead and just draw real quick a fib on this candle. Yeah, I mean, we're holding that 50% pretty well. We kind of tested it here. We opened below and then went way up. And we just been above that 50% of that move right there, right? That 50% line right there, that 0.5. So as long as we hold that level, then I think that we're poised to continue to move to the upside. And your final target based on that, just that one candlestick, will be 35.28. But if we do break down below that 50%, we get this 29.82 underneath that, 28.86 underneath that, $28 for US Steel. Last one, CCJ. CCJ, I mean, clear as day to me that this thing is going to break out. I think I got allergies. We have previous resistance, hard resistance here, sent it back down, came back, ripped through it on this candlestick. Nice strong move, found some new resistance, fell hard. Big buying pressure here on this candlestick to keep price way up. I mean, look at this candle. This candle went from a high of 33.56 to a low of 31.58. $2 move, unheard of for CCJ. The CCJ looks like Tesla right now. Look at these candlesticks, insane. And then continue to ride that 20-day moving average. Good consolidation, a lot of sellers sitting in this area, as you can see by all that sell pressure in those wicks. Strong move down, try to undo it, couldn't. Gapped up, red candle, and then just bullish engulfing, right? This one candlestick ate up all three of these candlesticks here. Strong candlestick. Let's see, Nvidia has a bunch of sell. So they have earnings on the 23rd, which is on Wednesday. Earnings on Wednesday, and a bunch of sell recommendations currently right now. Interesting. Okay, so that's what it is. So Nvidia earnings is going to be what dictates where the market is going to go, especially like the last time that Nvidia announced, they were talking about AI and just like all of tech, all of AI, everything went insane, right? So either way, I'm happy. I mean, if the industry such as, US Steel or CCJ fail, that's fine. I don't care. Like, we can get a nice downside play out of it too. I personally rather tech go up, right? Tech runs the world. So as technology advances, so do we. So I like for tech to go up. But CCJ, after this bullish engulfing, sitting right at that previous level of resistance, I want to see like one or two candlesticks form along this line. And you can see, I mean, we had a nice Fibonacci measure move, pull back, found support, and then just ripped right to that target, that 1618, right? So I'm actually going to redraw the fib from here to here. Oops, that's not the wrong tool. Draw my fib from here to here. Yeah. It's holding a key area at 786 fib, a golden Fibonacci level. Above that, rip through, hit 35. Above 35, hit 37. Above 37, hit 39. For CCJ. Let's look at Nvidia's chart one more time since they have earnings in a few days. Yeah, I mean, I think it's just like a nice little, tiny little pivot machine gun. Just eat up that 50-day moving average. Want to stay above it, right? So if we get a good green day, I think Nvidia is going to be the one that rips up. And then it might just rip up one day and just kind of go sideways into earnings, right? Rip to 450 and then go sideways, and that's fine. You know, I don't want too much out of it. 450, I'm more than fine with 450, right? From 400 and what is it? 432.99 to 450. That's $17. Nice $17 move. 3 spots out the money. I'm not mad at it. Let's look at Lulu. I looked at Lulu earlier. Give us the 100-day moving average bounce. I don't like it just because it's inside all this traffic. I need it to clear. I need it to be down here coming down or up here coming up, right? But it did make a strong move on Friday. Above that same line at 384.05, same line that I've had for months now, right? Above that line, then we can kind of work our way to 389. Above that, we can test some of these higher levels at 395. Let's look at AMD real quick. AMD. Oh, AMD looks great for the downside. Let me add that to my list. AMD. Okay. Yeah, AMD looks phenomenal to the downside. I mean, it's underneath the 50-day moving average, which is a strong level for tech to be, you know, as a gauge to be up above or below. So it's well below it. It did try to pull back in some of the candlestick that it formed on Thursday. We came back and retested a previous level of support. It's currently acting as resistance where sellers are stepping in. So if we do get a nice red market day, a nice weakness in the market, give up that level there. Let's give up that level there, and then we can try to retest these levels here, right? For AMD. And let me tell you guys, if AMD gets down to like $93, then I'm gonna pound the table on it. I think you guys should buy it at that price. I mean, obviously, if you've been in it, you know, I think anything under 100 for AMD is a value, straight up. So I like it. I hope you do too. I like this call, and I hope you did too. Thank you guys for joining me for this week's call. If you have anything else that you want to share with us, or you want me to look at, go ahead and drop it in the chat, and I will take a look and see if there's any value for it to give us some money this week. I'm back in the driver's seat this week. I've been absolutely slammed with travel these past few days, or past few weeks rather. Some of it has been leisure, but most of it has been work, unfortunately. So I wouldn't say unfortunately. It's fun. It's fun traveling for work, right? But I've been playing a lot of catch up everywhere ever since I came back. So I will spend a little bit more time on the floor. I will find some quality trades for us. Let's see. Now, if you look across this MGM that Terry's asking for, you see just across my line at 4182, you see all the way to the left, it acts as previous support and then resistance. Let me go ahead and draw it. Oh, God. I went to the park today for the first time in like 3 weeks or something. And I think that not only did I get bitten by mosquitoes, but I'm just getting absolutely clobbered. And I think it's by the pollen or something. I don't know what the hell's going on. This magnet's killing me right now. All right, hold on. Where's that line? Right, 4185. Okay, hold on 1 second. Coordinates 4185. Okay, there we go. So just looking across this line, you see support. Fell hard. So that looks like a line where MGM likes to make decisions, because look at this strong decision it made. Fell hard. Worked its way back up. Resistance, hard resistance. Popped. Nice pop. 2 days, right? Came back. Gapped underneath it. Again. Popped. Pulled back. Strong indecision day, and then nice strong move up. So I expect that not only with the 200-day moving average, but with this very, very key level, that MGM might want to hold it. So you might want to see some sort of reversal pattern form on top of it, right? Like a hammer, just like this, form right here, right on that level and that 200-day moving average. And above that, I think the first target would be the 100-day moving average right there. And then the next target would probably be this area of previous resistance. And then above that, we got the top of this candlestick right here. But underneath this, if we do fail underneath that 200-day moving average, we got this level here, and then we got very, very key level down there at 39.18. Right, 39.18 going way back is a previous level of resistance. Let me just go ahead and move it to over here. Right, very, very strong level. So you got your upside and you got your downside. Based on what I'm seeing with MGM on that level, I think that it's going to continue to work its way up. It might hold up on that 200-day moving average. When's the last time it interacted with it? down here when it was underneath it for a few days, retested it from the bottom, and then worked its way strongly up above it. So let's see what happens with MGM. All right, guys, thank you so much. It's been fun. I'm very excited for this week, especially with NVIDIA earnings. And I will see you guys tomorrow. Have a good night. Bye.